for you.
Okay.
Hello and welcome. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. Procyon, one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network and everything we do. Green Street Trust International, owned and operated by Rennell Jump and UConn legendary men's basketball player Jake Voskuhl. They specialize in tax plans for businesses large or small. They will save you money or get you a big fat return on your taxes. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, car accident, your mother-in-law ran you over with her car, your wife got angry one night and decided to stab you, the Finch Firm is for you. Pete has won legal battles all across the state of Connecticut. He will go to war to get every dollar you deserve in compensation. You just have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by UConn legendary running back Andre Dixon. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week, 6 a.m. You want to get in shape, you go to Andre. He has an athletic development program where he trains boys and girls in the sport of their choice from the ground up, helps them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state-of-the-art facility in Hartford, Connecticut. Go to www.dynamichumanperformance.com.
All right, and here we are for Luther James Insurance. I am your host, the best podcast host in the universe, Steve Cully. And with me, as always, the man from Luther James Insurance, James Whitfield. James, great to see you, as always.
Great to see you. Thank you for everybody for tuning in.
Yeah, you had massive growth in your audience from last week, so we're doing something right. You talked about several different policy forms. This is from Brianna. Universal Life. Is that a product that you sell, and can you explain it?
I sell it, but Index Universal Life is better.
I'm sorry. Okay, so there's indexed and variable.
Well, there's variable. I don't do anything variable.
Okay, it's all index.
So there's index and then there's universal. You know, so there's similarities, but there's a difference. You know, so index, it's like a no-fail kind of policy if it's funded properly. And technically you can do it with both, but the advantages with the index is that you get gains on the S&P by index, so if the market for some reason goes up 200 points or something like that, or 100 points, you are basically, you have a stake in that. So your policy might have a gain of, like, let's say 8 to 10 points. And if the market gets 200 points, you can get 10 points or 8 points to that gain. So that's how your money grows.
So Brianna was asking that from her experience, I don't know if she's an agent or not, the index, do you believe that the index universal growth was in a surge in 2025? And do you see it possibly cooling in 2026?
It's all relative because a gain is a gain. So you can gain
Yeah.
1,000 points and gain 2. You're only getting a piece of the gain, so it doesn't matter.
Right.
You just
Oh, it doesn't matter. Okay.
It doesn't matter. You just need consistency of the growth. That's it.
Okay.
So if she's asking about the growth of it, then yes.
Okay. And like being an independent agent, would that affect the product mix that you would sell because of no, it wouldn't change anything. Okay.
Mm-hmm.
With she also asked, with carriers kind of leaning into the accumulation of products, annuities, where do you see margin compression hitting people like you, independent agencies, first? And how should an agency protect its book of business and its revenue base? Because I mean, you've been through situations before where you told a story last week about the book of business being stolen right from under you.
Yeah, I had a greedy I I had a greedy upline.
Yeah, greedy was not the word. I mean,
yeah,
that's like.
I mean, I'm keeping it clean, but yeah,
sadistic. But geez, but yeah, I mean, he was basically going right after your business.
He was straight up stealing.
Is that like a concern for you, where
that's always a concern.
People could get into your book of business and,
well, people who have access to my book of business. So this person had access to my entire book of business.
Right, because you were at the same company.
Yeah, and he was over me.
Yeah, exactly. So
yeah,
there's nothing you can do about that.
Well, yeah. So the funny part was when I found out, and I contacted corporate and told them what's happening, they did nothing to protect me.
Right. They were just like, oh, well, he's your boss.
You're an independent agent. Figure it out.
Yeah.
And I'm
figure it out.
That's pretty much what.
Thank you.
Yeah. I'm like, thank you for helping me out. You'll be in the lawsuit too.
Okay. So, James, this is from Sam, who is interested in the industry. Mm-hmm. She said, or I think it's a she. She was basically saying there seems to be an awareness gap, a lack of awareness. Consumers, many people that I've talked to say they want protection, but they don't buy. What concrete changes in sales approach, or my sales approach, or product designs could actually help close that book of business for me?
So I kind of understand what she's talking about.
Really?
Kind of. Well, I have a friend of mine where she's talking about she's trying to save for her retirement. And then I said to her, I said, I pretty much asked her, I said, can you get a loan? Can you get a loan for like, maybe 100,000? Because she's 52, 53 years old. And right. You would need, at that age, to get something sizable, you would need something like
pretty big collateral.
Yeah, like maybe 50,000 a year for, in a policy.
Right.
And how I structured it was I did the 50,000 for 3 years because I borrowed money from the gain of the second year. And she grew cold feet because the amount of money that I showed her, she couldn't believe. She didn't believe it. And I said, you've known me for so long. Why would I steer you wrong? Especially when you're able to pay the loan back from the gains of the policy.
Yeah, exactly.
You'd pay the thing off, honestly.
It was one of those things where she just saw it being too good to be true.
Yeah.
Honestly.
Yeah. because
That's
by
amazing.
the time she's 65, she'd have $5 million.
So just in
Tax-free.
13 years. Wow.
Yeah.
That's
Yeah.
amazing.
Yeah.
Had she done the 50,000.
Yeah, now every excuse under the sun is I can't afford it. I'm like, what is there to afford? If you're able to get a loan,
Yeah,
take the loan.
it's going to pay it back. Yeah.
I'm going to flip it 100 times over.
Yeah.
Guaranteed.
Crazy.
But I'm not begging you.
No. I mean, there's, as they've said many times, you can lead a horse to water, but you cannot
can't make him drink it. Yep.
All right. This is from Christine, who watched the Dateline episode over the weekend. I watched it as well after getting this question. There was a man in Georgia who had fallen on some health issues, and he allegedly committed suicide. And you had said suicide will not pay out, disqualifies you.
Yep.
She received some life insurance. Will you still get final expense insurance?
It depends on the situation, and I don't know what the situation is.
It was a gunshot wound to the head.
So she got shot, or the person
her husband, she said, shot himself in the head.
Okay.
And the coroners immediately ruled it a suicide.
Right.
The family was upset. This was in Georgia. They had the death investigated, and they basically said it was a homicide. And she was the only person in the house. They said the body looked staged, and they changed the manner of death to homicide.
But they blamed her.
Yes, and she ended up being convicted of it.
Of course.
But she collected on some of the life insurance policy. But as far as the assets go, if he didn't have a will or a trust, do the assets transition to her regardless?
If she's married to him, yes.
Wow. Okay. Because he had a lot of expensive parts.
Yeah, even if he had kids.
Yeah, he did.
I think the marriage supersedes the children. I think it supersedes giving it to the kids. Now, if she was just a girlfriend, even if she lived there long term, the kids get it.
Which makes sense because the kids contested the assets and they lost.
Yeah.
So, but as far as collecting some sort of death benefit on suicide,
no, not gonna happen.
Even final expense. Okay.
Yeah. Same rules apply.
And IULs, I don't know what a VUL is, have been.
It's a variable universal life insurance policy.
Okay. They have been really in the headlines for being productive performers.
They are, but it goes on the market. Yeah, they're good. I'm not saying they're not. It's just that there's too many variables to it for me to be convinced. Because you can gain a lot of money, you can lose a ton of money.
Just like that. Your policy can be worthless.
Because it's on the production of the stock. Stock market.
The S&P.
Yeah.
So any hidden assumptions, illustrations, do you think will be exposed if the market does underperform in 2026?
With a variable, it all depends on what stocks that agent put that person's money on.
Oh, okay. So you can put your money on certain stocks.
Yeah, it's like certain stocks. I mean, you'll still get the benefit of the S&P, but it all depends on how that agent sets it up.
It's. I mean, you're the one who does it. You choose where.
Well, as an agent, I'll sit there with the client. I'm not just going to willy nilly.
Oh, right.
Put them on a bunch of stuff and don't know about it. They may still defer to me, but I'm not I'm not a
Yeah.
I'm not a licensed
Yeah.
uh
Financial
you know
services,
yeah
financial planning. Right.
yeah. So
I
but
get that.
a lot of guys who do the variable stuff get mad at us because we, even millionaire clients, we're starting to take millionaire clients because we don't charge a fee up front.
Oh, okay.
Yeah, we don't charge a fee up front. And to be honest,
Makes sense.
and I'm not trying to take anything away from anybody who is a licensed financial advisor. It's great. If I was still a financial advisor, I'd still be selling IULs more than VULs.
Right. I agree.
That's my look.
I agree. Whole life dividend scales. This is again from the same person. They seem to be more or sensitive to rate moves. If interest rates continue to move lower,
They all do.
which
They all do.
oh, okay.
Yeah,
Are
yeah.
there any specific clients that you're proactively re-reviewing now because of the interest rates?
Well, for me, I changed my whole perspective on clients, period.
Oh,
So yeah. And it's, I told you I have my problems with chargebacks. Most of my problems with chargebacks are lower income folk.
correct. Right.
And the
Yeah,
mindset,
it's just too risky.
yeah, it's too risky, and the mindset is different.
Yeah, because you said they treat it like a bill.
Yeah. So like case in point, because this is a friend of mine, the person I mentioned earlier about getting her a policy, telling her to get a loan to do a policy, her mindset is like she makes decent money. She's self-employed, and I get it because you're self-employed, everything counts. I'm the same way.
Yeah.
But
Yeah.
but my mindset is totally different.
Right.
If I'm handing you a path to be a millionaire and you're not ready for it, then you'll never be ready for it. You're only going to think hitting the lottery is the only way to be a millionaire. And there's plenty of ways of doing it. So if that mindset
No, I agree.
is down there, it's not going to work.
Gina wanted to know which underwriting shortcuts introduced during the pandemic, accelerated apps, whatever, may have simplified the issue that you see are creating long-term adverse selection risks for carriers and agents such as yourself.
If there was any shortcuts, it's cut already. That's everything's.
So there wasn't necessarily anything during the pandemic.
I mean, they were pretty much, and they're still doing it now. Like you get insurance up to a certain amount. They will. I won't say instantly pass you. It'll be like an auto underwriting without a. Yeah.
Wow.
So it's more like they put the pros and cons of what they want and what they don't want into a computer. They'll send the files through, and the computer will access the good and bad of that person's health history along with the MIB report, and it's pass or fail. That's it.
Right.
Now they may change the grade. So like if somebody puts in for standard non-tobacco, because of certain stages of their health, they may be qualified for premium for a better, the step up, the preferred, as opposed to just standard. So
right.
Preferred gets a better rate.
Right. Right.
Yeah.
Okay.
So I mean, and some of that, believe it or not, is still in effect because companies are trying to cut costs.
They are.
And there's pros and cons to cutting costs.
Yes, they definitely are. How do you handle cases where medical access disparities mean clients in certain zip codes could face worse underwriting outcomes.
Never had that.
And oh, you never had that. Okay, that's good.
Underwriting's underwriting. They're not going by zip codes.
It
Now,
doesn't change by where you're located.
no, that's car insurance. That's property insurance, but not life insurance.
Beautiful.
Yeah.
What is the single most common claims friction that you see that can destroy client trust? And how would you redesign the client experience to eliminate it? From Eric.
I've never been in that position.
Okay.
Yeah.
So what I don't even know what that means. What does that mean about?
So like I had
collecting?
I had somebody call me yesterday for a policy that was on his wife, and I had no idea she passed away. Now, he was just looking at the policies that she had and he was paying for, and find out the policies that he had for her lapsed, and that lapsed during the time of her death, because he was calling me asking, does he get anything? I says, only if you paid your bill. You know,
how long had it been gone on like that to where
she passed away? Like, I think 2 or 3 years ago. Actually, I'm lying. I think he said she passed back in 2015. And
Jesus.
Yeah, she passed back in 2015. And
he wanted to collect on it now?
He was trying to, yeah, because he was going through her stuff, you know, because I forgot exactly how the situation worked out, but she wasn't, even though she had a policy, she still wasn't insured because she didn't pay.
She had let it lapse.
Exactly.
And
he was trying to collect because he was like, oh, I can use $25,000 or something like that. And I was like, yeah, you could have got the $25,000 if it was paid for.
So had been paid, even though this happened back in 2015, he still could have collected on it.
He could have collected on her if the policy was in good standings at the time. So it could lapse, but if she died before it lapsed, he'll get paid out on it.
Okay. James, you seem very empathetic and care-oriented rather than just a transactional service. You seem to provide service and guidance for life. How do you balance that on an empathy scale while still making it transactional? So obviously you can make money and make a living, because you're basically a psychologist.
Sort of, kind of, yeah.
You're a psychologist, but you still have to make money.
Yeah, I mean, I tell people what it is. I think what happens is you'll get calls from people, like in my case, the call I got yesterday. You'll get calls from people, and they'll drop the sympathy roll, already knowing the outcome, and they might think there's something that I can do to kind of reverse the outcome they're expecting. And I set their expectations because, like in the gentleman's case who called me yesterday, I said to him, there's nothing I can do. That's and it's a policy. Yeah, like in that case, it's a policy I didn't even write, so I don't know what to tell you.
So it was a policy you didn't even write.
I didn't even write.
And he reached out to you about it.
Yep.
And he was like, just help me get this money.
Yeah.
You were like,
pretty much.
I didn't write it. There's really limited options for me for what I can do.
Yep.
I got you. That's got to be interesting to get a call like that.
It's funny.
I mean, I can't imagine all the calls that you must get that are just from.
Oh, I get some doozies. I get some doozies. Yeah.
Have you ever escalated a denied claim on principle? And if you have, can you tell a story and about it and
Never,
what it may have taught carrier behavior?
never.
So I don't, again, I don't
It
know
has,
if that
or at
would,
least it's not. It hasn't happened yet. Let's put it that way.
because you write good policies
I
and
try to write good
there's
policy.
nothing, there hasn't been anything fishy
I,
about it.
I set the client's expectations before they buy anything, because I
Right.
can just say, hey, buy this, pay this a month, and keep it moving. But what I try to do is I try to set their expectations, the pros and the cons of buying a policy. So can no one say no one told me this or no one told me that,
Right.
and the basic thing was, like, I had people tell me they canceled insurance policies because they didn't see the benefit. They're like, I'm paying for something that I'm not benefiting from. I says, well, that's a good thing, because what happens when you need it?
Exactly. That's the biggest thing. What
Yeah.
happens when you need it? And I stopped paying it because I
Yeah.
don't think I need it.
And then when you re-sign them for something, well, why is it so much? Because you're at a different age.
Yeah, exactly.
You're at a
Exactly.
different age. You're not going to get what you got the second time around. It's not going to work. Yesterday's price is not today's price.
So, this comes from Greg, who enjoys your show, is interested in getting into the industry. He's a recent college graduate. He's in graduate school right now, but he is unsatisfied with his current curriculum and education.
Okay.
So with agencies, he likes the idea of being an independent agent, having your own freedom to work with who you want to and the carriers.
Yes.
His question is, if carriers were to decrease commissions to, protect margins.
They'll lose business.
Okay. He just
Unless they
wanted
get
to
people
know.
like him. Unless they get people like him who doesn't know any better.
Yeah.
But I'm what, four years or so in the business.
Yes.
And I got a company now that I'm dealing with, a final expense company, where they suspended, and it's still suspended. It's been suspended now going on 7 months. They're changing, they're rebranding their brand, and
Right.
they're not taking applications. And I'm like, well, that's screwing me up, because not to say I use them totally, but they pay fast,
Yeah. Sure.
They pay fast,
So yeah, that's kind of what he was asking. What your
Yeah.
contingency plan would
Just
be.
You just find other
If-
carriers.
There's plenty of them out there, right?
There's plenty. Well, in some cases, if you're with a IMO, independent marketing organization, you can only, well, if you're stuck with them and them only, you can only use what they have. But because you're independent, you can work with anybody.
Exactly, and that's the beauty behind it.
Yeah. So like I had an IMO contact me, and they were like, "Oh, we'll give you leads, we'll give you this, we'll give you that, but you have to bring all your deals on your book of business under us." I said, "Then that's not being independent. I'm being
There's
subservient.
nothing independent about that.
Nothing." And I said, "It's not going to work." And they came at me like 3 or 4 times. It says, "I still have to work under you and you only." It was like, "Yeah." I says, "Well, you're wasting your time."
All right, we'll be right back.
Down south, we have Julius Williams, Jordan Harris, and the rest of the team of the Trench Mob. They train offensive and defensive linemen. They compete in 5v5 tournaments and college showcase camps all across the country. They have sent kids to schools like Florida, Florida State, Miami, Clemson, Tennessee, Georgia, Alabama, just to name a few. They have sent the highest percentage of kids who work with them to Division I schools on scholarship. To work with the best, go to trenchmobfootball.com. Ned Von Young runs the Fresh Fold Laundry Company in Chapel Hill, North Carolina, a high-end laundry service. You book online, put your laundry out in a clear plastic bag. They pick it up, wash, dry, and fold it for you in 48 hours. They also offer an expedited service if you need that as well. They have an online subscription model, weekly or bi-weekly, where you can get your laundry done that way. They offer deals for college students. So if you want your laundry done, you can do it in your own dorm. They have a pickup and now a delivery service. So you can have your laundry done without leaving the comfort of your own home or dorm room. To sign up, go to their website, my-freshfold.com.
All right. Greg also wanted to know, he has been contacted by certain companies, life insurance companies, to work for them. Talk about, what it's like to work for one specific company as opposed to being an independent agent, being able to work with all of them. Are there advantages to working for a single company? Do they give you like 20 years and you can retire and you get a pension and the 401k and all that crap?
It depends. So like big carriers, not carriers, but big organizations like maybe New York Life, they'll give you benefits and stuff, but you're under them and them only.
Right. And you can only sell their products.
Right. But the cool thing about, being under one company for a little bit is you get to learn the business. You get to learn product. I didn't do it that way. Like I worked with and I kind of still work with them, but they granted me the ability to be independent. Company called Combined Insurance. So they do life insurance, but it's kind of low level. It's basic life insurance. It's not IULs and stuff. They're kind of like Aflac. So they'll sell you the accident policies, accident and hospital policies, things like that, cancer insurance. You can make a good income with them, but the thing about some of those companies is Combined was my very first company ever into insurance. So they really teach you how to grind, and I hope I'm not doing an ad, but they teach you how to grind, and I carried that grind into my current business. I still work with them here and there. I'll go to companies and sell their products to companies or so on, and but you'll learn a lot under that kind of an organization, kind of like that. And then when you're ready to go about doing your own business, then you can jump, and they're very good. They were very good with that because they encourage the independent market, so to speak. Because I guess maybe they're trying to save on paying out benefits and all that. Because you'll get benefits.
Of course they are.
Yeah, but the thing is, you have to work that hard so that your benefits pay for themselves, because they're not just going to willy-nilly give it to you and then you pay out X amount a week or what have you. So,
are there any sales tactics that you see that are still used industry-wide that you would ban if you could? And why do they still persist?
It's really up to the individual. So, all right. So for argument's sake, like in basketball, they try to rule out, a player for foul baiting, right? But if you're playing within the rules and you still find a way within the rules
to get,
it's not an infraction. So you kind of have to, I believe in doing things like getting referrals and so on and so forth, but I really get out on, and pound the pavement.
Yeah, yeah.
I'll literally
That's the only way you
go
know
door to
how.
door. Yeah, I go to businesses and all that stuff, just for the fact of, garnishing more business. And then there's days where I'll spend money I don't have on ads, to try to get more clients coming in. But the thing with that is that you get a lot of weeds coming in before you can find, good flowers, so to speak. So, it's a mix of the two, but I haven't seen anything, sneaky or dirty. I'll set up a table somewhere at a hospital and just talk to people as they pass through. I try to be productive with my day. So I haven't
Yeah.
anything that should be banned or what have you, because pretty much everybody does things pretty much the same way. It's just about how gritty they do it, or not gritty.
Right. Right. Absolutely. If there were a carrier that you place business with
Mhm.
and they were to tighten their underwriting and raise their rates mid-years,
Get another
mid-year,
carrier.
that's what I was going to say. Do you stay? Do you continue to diversify carriers, or
Well,
do you push clients to convert policies?
I like to. I never try to convert a policy, like especially if they're written with me, unless it's really, really better than what they have. Some people, a lot of people that I deal with, they're pretty much, they get a good deal, they stick with it. They don't want to do the unknown. But what's this? Oh, okay. So um, I try to have a plethora. Me myself, I might have 4 or 5 carriers in my quiver, so to speak, in my pocket.
Yeah, yeah, that you, yeah,
and I might use 2 or 3 of them.
right, right, that
Consistency.
you trust and you feel confident with using,
Yes.
especially. So I was telling you about the this case in Utah. Her name is Corey Richens. She was arrested a year after her husband's death of an accidental fentanyl overdose, which is
Yes.
hilarious. There's nothing accidental about it. She was infuriated because I believe a month before her husband's death, he had put all his assets into a trust, and he also had his own business, which he shared with somebody else.
Okay.
And he gave that person the
Carte blanche.
opportunity to sell the business because he didn't want his wife involved with it at all after his
Makes
passing.
sense.
Yeah. And she went to probate court and was contesting this trust for a year to 2 years and ultimately lost. So does that pretty much show the strength and power of a will or a trust
Absolutely.
when you pass, that it's
Absolutely.
if it's
Yeah,
done
'cause
the right way,
yeah.
airtight.
Yeah. It can't be contested. It is
Can't
what
be
it is. You could
contested.
try.
And she did, and she
Yeah.
did. And they also thought it was unusual. Um, he had met with a divorce attorney, and he wasn't ready to take the leap of making, going to file for divorce, but he did want to meet with an estate planner
Yeah.
to kind of
Smart.
change things around.
That's smart.
Is that anything you've heard of? Is that like typically normal of someone to do? Is that like getting your
You want to
ducks
check
in a
your
row
options. Yeah. Kobe
before?
Bryant's wife did it when he got busted for cheating on her in Denver. Yeah,
Wow.
yeah, because he's got a lot of dough. And the funny thing is, they never had a prenup. So
that's what I was going to say. Yeah.
She pretty much wanted to know, what is she entitled to?
Right, because this guy did have a prenup.
Yeah.
So that's why it was kind of interesting to read about it.
Yep.
He had a prenup, and she got her real estate license and master's degree, and she was trying to flip homes.
Mm-hmm.
And she was an absolute disaster at flipping homes. She lost money on most of the properties that she purchased and resold. She took loss after loss after loss and was borrowing money from him. This was a guy in Utah who was making $33,000 per month.
Oh.
And yeah, and she was taking money out of their joint account.
That's literally $1 million a year.
Yeah, that's what they kind of assessed. His business was worth $6 million a year with the both of them, but his portion was worth $3 million. But yeah, that was the surprising part of it, because the divorce attorney said that traditionally they don't meet with an estate planner until they're ready to file for divorce.
Yep.
So that's why she was saying, like, I think that he was getting close to coming to that point.
Yeah.
Because she was cheating on him, she was taking his money, but his thing was, she's the mother of my children, I want her taken care of. And
listen,
one of the
everybody, if you want to protect your assets, put it in life insurance. Name your beneficiaries and everything else. No one can contest it. But
absolutely,
you making $3 million a year? Come see me.
Absolutely.
Put your money in life insurance.
And one of the things she flipped out about was the house in the trust.
Mm-hmm.
She was not the executor of the trust.
Nope.
So she was worried that, like, she was not going to be able to live in the house.
She's not.
And
unless he
she
bequeaths
was not.
it to her.
Yes.
Yeah, unless he bequeaths it to her. Yeah.
She was not, but she was going to be provided, like, basically a lump sum of money to do what she wanted. And there was trusts set up for the kids. Yep. So they would be taken care of. He wanted his family taken care of, and he kind of,
and yet he should.
And he kind of was taking care of her to a limited extent, to where he would not give her the house, but he wanted to make sure his kids were taken care of.
So I'm gonna share a story like that. I'm not in that position per se, but I'm doing a policy now for myself, an IUL, and I'm planning on doing, like, because I'll knock on wood, I'll be 57 this year. So my grandkids and my daughter is already taken care of because I have policies in place for them. So when my daughter is all set up, by the time she's 40, she has, like, I think $6 million in her policy. So she can retire. She can honestly not work at 30 or 35
and be set.
But, like, I wanted to leave stuff for whoever I'm married to at the time. I'm going to leave them some money, but I want to leave my nieces and my nephew something.
Yes.
And I think my death benefit is like $4.5 million, but the money in the policy, because I'm using the money in the policy. So
right.
By the time I'm like 65, I have something like $5 or $6 million in the policy.
Wow.
Yeah.
All right. Let me play this, and we will finish right up.
Finally, we have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial services. He specializes in life insurance and insurance policies. He will save you money, make you a boatload of money, and do so tax-free. He also specializes in retirement planning because we know the stress that goes into thinking about retirement. How much am I going to need? For how long? Do we have enough? Because fear of the unknown is real. To contact James, go to www.lutherjamesinsurance.com.
All right. So, do you see one specific regulatory risk for agents in 2026?
Not that I could think of offhand.
Most underrated client conversation that you think most agents avoid?
I think most agents well, it depends. So if you're talking to somebody, up there in age, and you're trying to sell them a policy, especially they've never really bought anything until now, and they're trying to cover their burial. Some people are having some agents I know have the uncomfortable conversation with them about price because of their age. The premium is going to be high, and it's going to be probably like a minimum of $5,000. Why am I paying $130 something a month for $5,000 in coverage?
Right.
Because you're 75 years old, and if you're trying to get $10,000, it's $300 a month.
Right. No, I get that.
You can't get it any cheaper.
Yeah. I mean,
I see the commercial on TV, and it's this, and this, and that's the conversation I have all the time, and it's the most uncomfortable conversation because I'm repeating myself over and over and over again.
Well, it's not you. It's not like your decision. It's not like James isn't making the prices. No. James isn't making this decision. This is the policy. This is what it is.
That's what it is. And then what it is these commercials are so misleading because they'll say for $30 a month, it's $5 a day or some nonsense like that.
I heard $2 a day the other night.
Yeah, you can get $35,000 in coverage. What they're not telling them is that $30 or whatever it is per $1,000 it's a unit. It's per $1,000.
Oh, yeah. They definitely don't mention that
because it's in the small print. It's
very selective advertising.
Yeah, like print is that big.
Yeah. Oh my God.
So I get, you're lying to me and this, that. I'm gonna go to where I see on TV, and I say, all right, go ahead.
Yeah, go ahead, go call.
Yeah, you'll be back.
Same thing.
Yeah, it's really like they're looking at it where it's like the commercial might say something like $5 a month or something.
Oh, I've heard it. I've heard it on the radio. It's unbelievable.
But it's per $1,000.
Exactly.
It's per $1,000 a unit. That's what it is.
One metric you would say every agent and every agency should track weekly.
One metric is pretty much how many people you talk to.
That's exactly it. It's a numbers game, correct?
And on top of that, it's not. It also shows what you're doing right or wrong. So if you're talking to 20 people a day, out of the 20 people, you should be able to sign up 2 or 3.
Right.
And if you're telling me you're talking to 20 something people, then I'm expecting production of 3-4 sales per person. So if you're not achieving that, there's something you're not doing.
There's something missing.
And at that point is when I start to kind of analyze your process, how your approach is at every per day, because it could be you, and 9 out of 10 times it is you.
Yeah, and people don't want to admit that. They want to believe everything themselves.
And that's why I like being independent, because you eat what you kill in this business. And if you don't go out you don't eat. Or if you're not working some particular way, you don't eat. Nobody's going to hand it to you.
Exactly. And you're still technically 1099, right? Independent
Yep.
contractor.
Yep.
That's how it works. Okay. All right. Well, James, phenomenal episode as usual. Thank you for answering questions, guys. The questions I didn't get to, we'll get to next week. Continue to watch the show. We appreciate the viewership on all platforms. And for James Whitfield, Luther James Insurance, I'm Steve Cully, best podcast host in the universe. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them right back at life.